All right, welcome, good day today. All right, today is June 15th. Welcome everybody to the client support for this week. My name is Bennett McDowell, founder of traderscoach.com. How's everybody doing out there today? Okay. Got a good full room today, so feel free to ask any questions. I'll get to them before the end of the session. You can always type those in questions. You type in the question window. So that's how you do that. All right, Mike, you were here. Excellent. Okay, good to have you on board. All right, so the purpose of the client support webinars, just to start out, is it's my way of being able to reach out and say hello to everybody and help them in any way I can in order to use some of the software tools that you purchase from us or understand some of the concepts in trading the markets. Whether you bought a course or the software tools, that's the purpose. So we meet once a week, and that's kind of what I'm all about. Also, too, as you type in questions, be patient. Okay, I might not get to you right away, but I will get to you before we end the session. Okay, there's some things I cover and all that kind of good stuff. All right, so but feel free to start typing them in. All right, let me go over a couple things, and then I got a couple things I want to cover, then I'll jump into answering questions. All right, so first thing I got to tell you about is that there are risks involved in trading. No matter what trading software tools you use, ours, anybody else's, whoever's, or what type of things you read and the information you act on in the markets, nothing's guaranteed in the markets because the markets are not linear. 2 plus 2 does not always equal 4 in the markets. It represents human beings trading the markets. We all have emotions. So a lot of times the market gets very emotional. And of course, when it's emotional, it doesn't always react like it should. So please keep that in mind. Also, too, you'll have periods in the market, just like people have periods in their life where things aren't so stable and they go up and down, up and down, up and down. And we see that as volatility in the markets. And then, of course, when things are stable in one direction or another, then we have trends in the market. So when we use software tools in the market, we're trying to make money on these various different types of cycles, and that's the whole purpose. So the first thing you have to do, of course, is identify the cycle, and if it's trending, that's where the pyramid trading points come in and so forth, and so on, as well as the other software tools. So learning how to use those become really important. But we want you to also trade with money you can afford to risk in the markets. We have found, and we've been doing this for a long time, that people that trade with scared money, and that's money they can't afford to risk, don't do half as well as those that trade with money that they can afford to risk. And the reason for that is because traders that trade with money they cannot lose are not going to be relaxed and flow with the market. Instead, fear is going to kick in anytime the market moves against you. And that's when they tend to panic and do the wrong thing at the wrong time. So you always want to trade with money you can afford to risk so you don't have that kind of stress. The other thing too is you have to know how to do risk control. And we have all the tools and information on how to do that, but that's another thing you should do because again, nothing's guaranteed in the markets, right? So because of that, we always have to account for what happens if the trade doesn't work. How much are we going to lose? And you want to know the amount you're going to lose because that's how you know whether you're risking too much or not. And that's where all our materials on risk control come in. And then finally, too, I don't know each one of your personalities or your relations to risk and greed or how much money you have, your liquidity, your age, and things like that. And all those things are important because depending on some of those variables, you may or may not take certain trades that we recommend or certain ideas. So you need to check with your money manager or financial consultant, advisor, maybe an accountant or attorney, whoever you turn to for financial advice that knows you personally. That's the important part. Check with them to make sure some of the stocks that we look at and recommend, some of the things that we talk about here are suitable for you because they may not be. So you need to check with somebody like that. So I just kind of like to cover that before doing any webinar like this, just to be upfront in that there are risks in trading the markets. Now, I have a variety of books that are designed to round out your trading education. And our newest book, called The Money Management for Traders, on the far right-hand side, is a great and easy read. So it is a Cliff Notes book of our more in-depth book, which is on the far left, that white colored book called The Trader's Money Management System. Great book, The Trader's Money Management System, but it is comprehensive. So it's a bigger read. The book on the right is a smaller read, and it's kind of like gives you what you need to know so you can get started with risk control. And we did that because we want to help as many people as we can keep trading, all right? In other words, if I have a client just came in and he comes in and doesn't understand risk control, loses all his money, then we're not going to see them again. And I don't want that, all right? So I want them to stick around. And money management is a key element for you to hang in there, okay? Because there's a lot of times when we trade the markets and we kind of looking for that big trend, and the market's not quite giving it to us yet. And so we get stopped out and we have to keep our losses small. So that's the purpose of money management, is to survive so you can get those bigger wins, okay? So really important stuff. And then I have other books, you know, on different forms of technical analysis and our trading systems, etc. But that is a must book for everybody. And if you don't own it, I think it's only like 15 bucks. And we have it available on Kindle. We have it as an audio book. I have several students that love the audio book because they commute to work and they can listen to it there. All right, so we tried to make it in different formats, so no matter what lifestyle you have, you can handle that. And then of course I have the different software tools here. All right, couple things I want to discuss here real quick. You know, the upper row here, this is our charting software. So everything, when you open up a chart, this is the software you're going to see. Okay, you're going to see the art software. That's your triangles, 1Bs, you know, 2Bs, things like that. Then you have the histogram at the bottom of the chart called the OWL, which is momentum, Elliott wave analysis. And then the PTF, are we going to have more highs or more lows in the market? We also do PTF scalp trades based on this indicator. And then we have the trend line master that we use for identifying trend lines, and they automatically get drawn in your chart. We use these for scaling out or even adding into a already initiated position. And then this little indicator over here is kind of cool here. This is the ERI. This measures fear and greed in the markets and will identify or alert you when we're getting to a manic area in the markets, either up or down. So that's the charting software. Then we have a whole row here of scanning software. Now, the scanning software works inside scanners of certain charting platforms. For example, in NinjaTrader, you have something called the Market Analyzer. That's a fancy way for them to say scanner. In TradeStation, they have what they call radar screen. That's a fancy way of saying real-time scanner. And in multi-charts, they have a word called scanner, which is a fancy way of saying scanner. Okay, so all these particular boxes I have circled on the second row are all scanners. Now, this is our brand new one, and I am very proud to announce that we are releasing that today for NinjaTrader users only. The TradeStation release is going to be probably in a week. We've got a few more things I want to get organized on that scanner, but it is ready for prime time on Ninja. So if you're using NinjaTrader, you are going to get an email from me today by the end of the day. All right, and that email is going to give you the ability to download the software, install it, or sign up for our free installation with our software engineer. Okay, so that's coming later today. I'm going to put together on this today. This is why I want to wait a little while before sending this email out. I'm putting together right now a video on how to install it and how to use it. So if you want to try to install it yourself, you should be able to. Okay, if you run into any trouble, you can always sign up for free tech support because you have that for 30 days after an initial purchase of software. So that's coming today. Very excited about it. You're going to love it. I'll show you what it looks like on Ninja in just a minute. And then for all TradeStation folks in multi-charts, don't worry, it's coming. Okay, it'll be out in about another week, and it's going to be super on those platforms as well. And then our final row here is our risk control software. We have the Trader's Assistant, which is what I personally use, and what I also use it for too is our day trading room. And a lot of you in the day trading room see all the results listed with that. It keeps track of your trades. It tells you different statistics about your trades as well. Then I have the risk to reward calculator, which everybody should own. Okay, if you don't own this, get it, because it's worth its weight in gold. Calculates trade size, but also risk to reward. Now, if you own the trade size calculator, all right, that calculates trade size, but not risk to reward. So if you want to upgrade, we have a place in the store where we give you a discounted price to upgrade. Now, the risk to reward does everything the trade size calculator does. So it includes trade size, but it also adds risk to reward as well. All right, so I just wanted to go over that, the different softwares that we have available. And of course, anybody has any questions on that, let me know. One other thing I will mention here, you know, security software is very, very strict these days. And basically, you know, it gets more strict and more strict with every update they do. So I've noticed a lot of times when I run certain installers or download software, it gets flagged as malware or some type of Trojan or something like this. All our software is 100% virus free. Okay, and I have it double checked, so I know. And our programmer checks it, and then I check it. The problem is there's called false flag readings on the virus software, and so sometimes it flags perfectly good software as potential malware. All right, so you got to don't be concerned if you see that. Just say it's okay. A lot of times you'll get a pop-up screen and your security virus software will say, what do you want to do with this? And you always want to either put it on the exclusion list or exclude it from the scan, okay? That way it gets installed and restore it, okay, if it asks you to restore it. So again, that's something you may or may not run into depending on what security software you have, but it seems to be kind of getting universal these days. So definitely keep track of that. Anybody have any more experience than that as well? Does anybody have any experience on that? On that security software? Norton, okay, yeah, I use Norton too, okay, so I get it, but I just, you know, basically if it flags something, I restore it and exclude it, and I'm good to go. A lot of times, one of the reasons I think certain software gets flagged is that, for example, all our software works off activation keys and requires during that process of pinging our servers. So we have a whole, you know, quadruple backed up activation server situation for our software. So basically, when I give you an unlock code or we activate your software for life, it has to check with our servers to make sure the number, the license number is okay. And so that is kind of what these virus security software don't like, okay? So they kind of say, oh boy, this thing's gonna talk to somebody outside your computer. That's you know, dangerous, but it's not, because that's just for activation purposes, and that's all it is. All right, so I just wanted to cover that because I think people get a little bent out of shape with that, and I understand that, okay? But nothing to worry about, all right? Nothing to worry about. The other thing too, let's see, what else did I want to talk a little bit about here before we get going? Oh boy, let's see. I think that's pretty much it. I just want to make sure that was covered. And all right, let's jump in. All right, so let me get rid of this. and go to charts. So a couple little things. I've got all your questions coming in. David, I see yours. Michael, I see yours. I'll get to yours in a minute. I just want to, for TradeStation folks, I wanted to go to the platform. TradeStation is not quite the same as NinjaTrader in terms of the different types of customizations you can do. There are global settings on TradeStation, and then there are chart-specific settings and also scanner-specific settings, all right? So there's a lot of different things you can customize on TradeStation. But one of the things, when you talk about a global setting, that's usually somewhere when you go up here and you go under File, all right, and you go to Preferences. That brings up the preference window. At least I think it does. It's true. Oh, no, I know what I did wrong. You got to go to Preferences and then Desktop. They have different settings. All right, so here is the global settings for desktop preferences. So those of you using TradeStation, you might want to thumb through here and just see the different possibilities of what's available for you. For example, I had one client that our support system told me that every time they shut down TradeStation and reopened it, it didn't open. And you have to make sure, and I don't think unless you changed it somehow, but if you have this little box checked that says do not open workspaces, then it's gonna, TradeStation's gonna open blank every time, even though you save it. All right, so instead, I have it checked to open all workspaces from previous sessions. And they even tell you how many you want opened or not, okay? Kind of interesting, right? Then also too, when you come down to desktop, see this little thing here, desktops, same thing. So I only have one desktop that I like to load, but some people have several. And so you can make sure you either load the desktop from the previous session or have it open up a new desktop that's blank, or open up a specific one from some that you've saved before, okay? And then on exit, this is kind of important. So if you have more than one desktop open and you exit TradeStation and you want everything to close, well, then you have to set close all desktops. If you only have it set to the default, which is close the active desktop, that means if you have more than one desktop, you're going to see the other one. The other one's not going to close, and you're going to have to individually close that one. So I'm not sure a lot of people understand that these settings are there, but you should go through them, all of them. All right, they have performance, you can probably leave alone. Again, view, okay. Let's see, status bar, you can check on this, okay, on what you want to see and things of that nature. And then the charts have specific settings, all right? So if you go down to the settings, if you go put your mouse on, anytime you want to access something to do with a chart, you have to put your mouse on the background of the chart and right click. Same thing with NinjaTrader. And then you go to settings, choose what you want to look at, and they have window settings. So let's say you want to change the background of the chart. Well, this is where you do it. All right, so you go in here and I've got white selected. Now remember, if you're looking at a black chart and you want to change that to white, well, then you also got to change the text, because the text is also going to be white on a black background or a light color, and you might not see it once you change the background. So this is where you do that, okay? And then what you want to do, if you like what you set it as a default. Check here for default, okay? So that's kind of important. But you have a whole bunch of settings associated with this, okay? What you can see, what you don't want to see, and so forth, okay? So that's kind of important. Now, there's other settings, I think, in there. There's window, there's that was the window setting, but there's also preferences here too, specific to the chart. Okay, so you can go through some of these. Enable right button double click. Don't need that unless you want that. but here's a whole bunch of settings. So my point is understand that this is available for you, okay? And this is, you know, basically where you can adjust settings here. And a lot of people don't realize that. Now, if you're using the OWL or the PTF, here's kind of an important setting. There's a couple things. If you want to quickly go to the settings on the OWL, take your mouse, go right over to the histogram bar and click it. And when you see those dots appear, that means you've highlighted the OWL. Then left click, but double click. And that brings up the window on how to make adjustments for the OWL. Now, there's another way to get there. Again, another alternate way to get to all the indicator settings is put your mouse on the chart, anywhere on the chart you want to adjust, right click, go to studies, and then go to edit studies. That brings all the studies you have loaded on the chart. Then you can go, for example, to the OWL, you highlight it, customize, and it brings up that same box. So I just showed you two ways to access the different studies, right? Okay, so that's kind of important. Now, there's two very, very important things I want to show you in here. It's under the general setting for the OWL. We're also going to look at some of the other indicators at the bottom. This is specifically for the indicators at the bottom. So you want to have it on auto detect. Okay, and this is really important. What I do is uncheck that box. The default is checked. Now, we have looked into when we, create software, we try to control as much of the defaults as possible. This is a default we could not control. So TradeStation takes over on this and always checks this box. Uncheck it, because if it's checked, it's not going to look the same as the way I want you to read the indicator. So uncheck that box. So if you're looking at somebody that's using, for example, another charting platform and their OWL looks different than yours, chances are it's because this box needs to be unchecked. So what I'm concerned about with indicators at the bottom is it says update value intraday tick by tick. I want to wait and see what the value is at the close, okay, on those indicators. So that's why we uncheck that. All right, so that's really important. And then of course, when you go to the precision trend filter and you go to general, you have that same option here to uncheck it. And then you also want to make sure all your scanners are unchecked. Now, if you're using NinjaTrader, you don't have to worry about this. Okay, we've taken care of that for you. But on TradeStation, because there's so many different settings and so many controlled by TradeStation and not us, that you have to think about it. Okay, so on this one here, Trendline Master, let's uncheck that. Okay, and then I want to save this as a default. So in other words, every time I load it, it will be okay. And then I want to do the same for this. Okay, and that one was done. Okay, so that's kind of what you want to do. Now, a couple things here I want to talk about on this. When you make these settings and you save them as the default in here, and this goes for NinjaTrader too, that does not mean it's changed your template for you. So whenever you make a setting change, what you want to do is also update the template. So right click, go to studies, go to edit study groups. All right, and we have this one. Okay, I want to be able to save this one. So I want to check and make sure, then come back here, go to studies, save study group, and check this again, and then save it. It'll tell me, you have that one already. Do you want to override it? And the answer is yes, because I changed one of the settings for the TLM on the check mark. So now when I load the template, it will have everything properly. But if I did not update the template, then I would have been stuck with the older template with the check mark, even though I made that as a default on the individual indicator. So you have basically an override on the template on what you say. So it's kind of important to know how to do that. Any questions on that? Primary is something for the TradeStation users. The other thing too, let's go to data for a minute, edit symbol. All right, sometimes, well, the default for TradeStation is always days back. I like to use bars back, all right, because it just, for me, I prefer that. And also too, with the indicators at the bottom of the chart, like the OWL, the PTF and TLM, you have to have at least 600 bars on the chart for those to work properly. So I always like to make sure I use the bar back that exceeds that, okay? Same thing with the scanner. You know, when you look at the scanner settings, you kind of want to duplicate the scanner settings with the charts so they look the same, right? So you take your mouse, go up here, studies, edit all studies, and that will bring up the study area, waiting for the scanner. And then you go into each scanner to customize, and you'll have all these things here. So you want to update that, for example, because you want them to be the same. And then you can see here, it's looking at 600 bars, right? So that's important. Okay, so you need to make sure everything is copacetic between the charts and everything else, so everything works good, right? Same thing with this, okay? I left these checked so I could show you. That's why I'm kind of going through these. All right, any questions on this? Okay, so there you have it. So that's TradeStation, and then we have NinjaTrader over here. And with NinjaTrader, you can access the same type of information by right-clicking on the chart, going to indicators, and a little different format, but the same type of information over here, but a little different. For example, you won't see some of the information displayed the same way as it is on TradeStation, okay? So just so you know, okay? All right, let me go through the questions, but I did want to cover that because I think it's kind of important to understand that. All right, so let me start out, Michael, with your question, wondering how you think the Fed news will affect the market. Are we in an official bear territory? Yes, we think the markets are going to sell off extensively. Those in the Moore report, you know, our Moore service is where we specifically go over the markets and where we think we're going. But yes, we are in a bear market. We are close to the bottom of the first leg down. We'll have some type of rebound soon, but the high that's been put in last year, early this year, we probably won't see that again for 2 to 3 years. Okay, that's the way I'm thinking right now. All right, so that's kind of it. Interest rates will be interesting today because there's so much different thoughts on the interest rate. 0.75% or 75 basis points is what is predicted. A couple of weeks ago, it was only half. Some people think 1. And then some people think what may happen is because the markets have sold off so much in the last week based on these interest rate speculations of 0.75 points, that the Fed might even back it down to 0.5 point to cause a rally in the market. All right, they're getting a little concerned about the sell-off in the market. It's making them look bad. So I think they may surprise everybody because the market's priced in a 75 basis point. That's why it sold off, 75 basis point interest rate. But they may now say, okay, let's not do that. Let's now surprise the market with 50 basis points and have a rally here. So it'll be interesting to see exactly what happens. If they come out with a 50 basis point, that rally will be temporary. It'll be a knee-jerk reaction to thank goodness it isn't 75 basis points, but they will have to come back and lower rates. the next time as well. So I don't think it's going to be a long-term effect on the market, but if they do 50 basis points, you'll see a rally. Okay, I would think. Hard to say with the market, you know, hard to say. Okay, but that's kind of where we're at now. All right, let's take a look at a couple things here. SQQQ for David. How you doing, David? All right, you use a TradeStation? Let me use TradeStation, right? You're a TradeStation guy, right? All right, let's do TradeStation here. All right, SQQQ. Now, for those of you who don't know, SQQ is an inverse ETF, okay, on the NASDAQ. So when the NASDAQ does badly, the SQQ goes up. Now, for those of you in the Moore report, you're already long on the SQQ. Okay, we had you long a long time ago. Okay, so you know, because we think if the market has topped, and it certainly has on all the sectors that we've seen, then that means an inverse ETF is going to do well, right? That's how they work. So you want to be long on these. The advantages of something like this is that many people that have IRAs, for example, they can't go short in those IRAs, retirement accounts, but they can buy an inverse ETF on whatever sector they want, excuse me, and take advantage of the same as if you were kind of like short in the market. It was kind of neat. So if we open up the weekly chart here, we can see that the ETF has sold off when we had the market rally, okay, went way up, you know, it was way up here because of the, let me just see if I get a few more little data points on here. Go the other way. All right, so it sold off way back up in here right after, you know, went way up because of the 2007 financial crisis, right? So then once the market recovered from that, obviously it's going down. A nice little short position there. Look at those pyramids, whoo, all the way down. All right, so now you're in a situation where you've got a market that has been doing nothing but going sideways. You know, it's gone so low that if we open this up a little bit, you can see even on the weekly chart, now we've starting to take out key levels of resistance here, right? All right, so there we have it there. So that's kind of an interesting thing to note on the longer term charts. And then if we go over to the daily charts here, all right, we can see this bottoming motion here and then a breakout here, okay? So, you know, the pyramids did a great job of tracking you in on this first leg up, but if you want to stay for the longer party, you got to keep your stop down here. In other words, if you want to trade the swing in the market, use the pyramids on that swing. Otherwise, make sure you keep your stop at the bottom, because this is what happens, and we never know how low this is going to go. But after it does what it does and then takes off and takes out the high, then move your stop up here, and that will keep you poised for the next big run. Okay, so that's looking pretty good. And we have a green PTF on the 60-minute chart, so it looks like higher highs on this one. Okay, so I'm liking that. QRFT. Let's take a look at that. And let me just take a look here. By the way, when you see the owl smushed up, just take your mouse, see it on the right-hand side, and go to the numbers associated with that, and you can kind of take a look at that. So nice big run up. Now we got a red owl, red PTF. So it looks to me like we're going to have some type of correction that we're underway in. So, you know, we're in that territory now. So I would say, you know, we're pretty much done with the correction, but actually still coming down. So we're in the right target zone, but according to the other indicators, it looks like we're going to go down a little further with a red PTF on the 60-minute chart. All right, then SPXU. So a bottom is not in on the correction yet, David. Okay. All right, so here we have this one, SPXU. Same type of thing. You can have your stop now under here, and notice the leg up, pull back, green, green. So definitely a long position still looks good there, okay? And if we open this one up, you can see as well, let me get a little more price history here. You can see as well that this was moving quite a bit down in bottoming, but now coming off the bottom, okay? So basically, and this is pro shares, you can see it right there, Ultra Pro. All right, S&P 500. So there you have that, okay? So hopefully that helped you out, okay? Good. All right, so anybody have any other questions? Let me show you quickly what the new scanner looks like, okay? Here's the 3 columns for the new scanner that we have up here. We have a short, intermediate, and long term. So what this new scanner called the multiple time frame analysis scanner is it's looking at whatever you want to put in. You can adjust the short term. I've got it set up for a 15-second because this is my day trading thing. And then I have this set up as a 1 minute and this set up as a 5 minute. But you could set this up as a 60, daily, weekly, whatever you want to, and put it into the scanner tab that you want it in. And the idea is I can look at these markets and I can say, ooh, okay, let's take a look at M2K. Let's go down and take a look at some of these things. M2K down in here, okay, and there you have it, okay. So we've got bearishness across the board there for the most part. All right, so that's kind of cool. All right, we have no trend on the long because we don't have a red PTF there. So kind of cool. All right. So it's really helpful. I can take a look and see what I want. Let's take a look at this one. This one has the MES as a bearish week, 5 minute, I want to say weekly, 5 minute, and a bearish 1 minute. So that helps, okay? I don't have to have the charts loaded. They're just all right here. Okay, I only have the intermediates, which is the 1 minute, are fairly bearish. I have nothing really on the gold right now. It's kind of waffling down, okay? And basically that indicator looks at the owl and the PTF on the time frames. You select them so you can see all 3 time frames on the same scanner. And so this was something people wanted for a long time. So, you know, there it is. Okay, so that's going to be released today for Ninja. It'll look very similar for those on TradeStation with a release date sometime we're hoping next week. Okay. All right. David saying thanks for the analysis for the inverse ETFs. Let me go back here to these bad boys here. Okay. This happens to be Halliburton, by the way, oil. Thanks for the analysis for those inverse ETFs. Do you buy them and sell them every day, or do you buy them and hold them till you're ready to sell them? Just like a stock, just like a stock, just like a stock. So if you're planning on getting in using like a daily chart or something like that, you could certainly look at those under the daily charts and the weeklies, okay? So that's totally up to you. And then your stops will be where the pyramids are and things like that, okay? On the indexes, really quick, you know, we got the S&P. I'll just quickly look at the Dow here real quick. And the Dow took out a key level of support for us. So we think right now, this is a wave 5 completed on the daily and a wave 3 completed here, okay? So that's kind of where that's heading down. All right, so target zone way down here, red PTF down here, probably getting into the 15 to 17,000 range before it's all over in a nutshell. All right, David, okay, thanks for the help. Oh, my pleasure, David. Thank you for asking the question, okay? Let's take a look at USO real quick here. All right, so obviously that's going up. USO, not all markets go up forever, so we'll even get a pullback to the downside on USO at some point. It's kind of due at any time. We're you know, have run up, so due for a pullback, bearish divergence. So we'll probably get some type of pullback, maybe into the 60s to 70 range, and then more highs after that, I would think. Because if you look at the long-term chart on oil, all right, you can see how far down it's really come, and it's come quite a ways. You know, you had the financial crisis back in 2007 that caused it to spike way up. And then markets got better, solidified, came down, bottomed, and now it's ripe to head back up. And it has started to do that. It has not taken out this key level of support. We're watching that, but you're probably going to get some resistance if you haven't had it already right in here. So I would anticipate maybe a sell-off at some point there. If it goes higher, then we have to redraw our fibs a little higher, but that's kind of what we're looking at right now. All right, well, listen, I've kind of extended my time here, but kind of fun things to cover for sure. So we're kind of looking on the markets as a whole. We're probably looking at a moderate bottom at some point here over the next week or so, and then a rebound from that. But that's all it's going to be, is a rebound. Okay, so don't get suckered in thinking the correction's over at this point. Now, are we always right? No, but we work in the realm of probabilities, and that's kind of what they're indicating at this time. So rebound from a low that's right around the corner on the overall markets. Maybe the Fed will cause that bottom today. Maybe they'll surprise everybody and have a 50 basis point instead of a 75, and the market will rally, the rebound, last for a little while, and then it should fizzle out and give way to more selling. All right, so everybody have a good week. Oh, one more, this is what I wanted to also announce. So what I did is all the recordings are on YouTube, but what I did is hid the playlist. Okay, so there's a link in the client support area that I just updated. Okay, and that link will take you to the private, all right, listings of all our client support videos. What we were finding is, because they were public before, and people were copying our stuff, we were finding it ending up in other YouTube videos and things like that. So we kind of decided we better secure those a little bit, and because those are for us, right? All right, so we kind of want to just make it available for everybody in an easy format. YouTube does that, but any case, so they're still on YouTube, but they're hidden. So if you go there without the private link, and don't share the private link with anybody, but if you go there without the private link, you won't be able to find them. So the link is in the client support area, you know, where you log in using your username and password, you know, the Customer Hub VIP client area. If you go to the VIP page or the home page, scroll down, I've updated the links there where it says recording, okay, for client support. So use that link. And then you can bookmark the page. All right, so now let's see. One more question. Hey, Aggie, how you doing? What if the Fed goes 0.75? Well, I think the market's already priced in a 3/4 point. If it goes to 1, all right, we'll probably see a little more pain before we see a bottom. If they keep it at 75, market's kind of that. I think we got one more leg down because the PTF on the S&P and the Dow are both red. So regardless if it's 0.75 or 0.50, it should return and go down lower. It's just whether you're going to get the rally earlier or later, okay? So 0.75, probably more of the same, maybe a little bounce and then lower lows. You could get a bounce even if it's a 7.5 a little bit because it's already priced it in. So the market may say, oh, thank goodness it's a 75 and not a 1. So that may cause a rally. If it's a 1, I think we're going to probably go down a little bit more, but eventually there should be a bottom even if it goes to 1. And if it's 0.5, then you might see an immediate rally. You know, it's kind of like you know, when people, when they announce, when analysts announce or companies announce their quarterly results, sometimes they're really good and the market sells off because it was already built into the price. And so now people are taking profits and they're gone. But if it's different, you never know exactly how it may respond. Okay, so just, you know, we'll wait and see what happens. But regardless of what they say, we're in a bear market. So when we're talking about a rally off the interest rates or more, those are temporary. So it's a knee-jerk reaction to news events. And they usually can last a couple of days or a week, sometimes depending on how significant it is. But the overall flow right now is we are in a bearish market, okay? I don't know. I'm not that smart, Aggie. Aggie's asking me, do you think the market feels that it should be 0.75 rather than 0.5, so it's a positive to kill the inflation? Yes, you know, I do personally, but you know, I can never know exactly what the market thinks in advance. I can guess. But yes, I think that's probably a good way to say it. Because sometimes, you know, you know, some people that watch inflation think, okay, it needs to be 75 to curb inflation. So if it comes in at 50, you know, that may annoy the market because you're not taking the right steps to fight inflation, right? And so, but you see, I have no idea how it actually will respond. But I can look at the tools. You see, here's the thing. If you look at the tools, that's where you get your answers to that. So if we go back, I'm sorry, go back to the Dow here, all right? The 60-minute chart has a red PTF. It's also due for the end of a wave 3 on that time frame. So, you know, is it gonna go down sharp and finish wave 3 here based on how it interprets what the Fed does? Or is wave 3 over here based on what the interpretation is, and we're going up to here as a short-term reaction to the news? Regardless, we're going to get a retracement at some point, whether we have one more low and then the retracement, or we get it now. This is bearish. So that is showing long-term bearishness. This is showing enough waves in here that we're getting near the bottom of A wave. So this is an A wave, but we could go down quite a bit further. You know, we may go down to 28, 27 on A wave. So we may get a little rebound here and then one more big draft down in here. A wave's done, long-term B wave, and then the shoe drops. I will tell you the interesting thing about C wave, when it comes, it's usually something we don't anticipate. You go back to the year 2000 where you had the dot-com bubble that started A wave, okay? And then you had a rally off A wave, and then the terrorist attack in 9/11 sunk it. Yet the Elliott wave fibs said it was due to get into that area that it got, and it did in March of 2003. So the Elliott wave kind of can't foretell what events will cause those levels to get hit, but that's kind of where we're looking for the market to go. All right. Okay, so good stuff today, really good stuff. So that's it. All right, so I'll see you guys back here next week. Exciting afternoon. If you're day trading, be careful day trading during the Fed announcement. All right, needless to say, could be exciting. My pleasure, everybody. Okay, great always to be with you each and every week. But bring your questions here. Okay, so that's why we do this. And this is basically a webinar for you. So we help you along with the software tools you're using or the education content. Okay. All right. Thank you, Michael. And thank you, Aggie, and everybody who participated today or just plain watched. Okay. So we'll see you back here next week. Have a good week. Enjoy the summer.